Hello, everyone, and welcome to BDSA's webinar panel on the future of financial services in cannabis. My name is Rick Maturo. I'm the Professional Services Director here at BDSA, and I will be your presenter and panel moderator for this afternoon's session. Now, before we get going, I just want to provide a little bit of information on BDSA for those of you on the line who may not be familiar with what we do. So BDSA is a cannabis market research firm. We provide the cannabis industry and its stakeholders with key information and insights that leverage dispensary retail sales, market forecasts for the US states, Canada, and global markets, as well as a robust set of trending consumer insights. And if our core product suite cannot address a question you have, we also provide custom research opportunities and consultative engagements via our professional services team. I also just want to mention, for those of you who don't want to take notes during this presentation, that a recording of this webinar panel will be available on our BDSA blog shortly after we conclude here today. Now, in terms of the agenda for this session, I first just want to introduce our panel of experts who will spend most of our time today answering some key questions about the current and future state of cannabis investment. But before we get to the panel, I will also present a short presentation covering the current size and state of the legal cannabis industry and what's occurring today relative to cannabis and financial services. So first, let me introduce our panel before we get going with the presentation. First up on our panel, we have Micah Tapman, who is the CEO of BDSA. Next up, we have Matt Singer, who is a managing director for the food, consumer, and retail divisions of BMO Capital Markets. And finally, we have Camille Gajrawala, who is a managing director of beverages, health, and personal care and wellness at Credit Suisse. So just to give you all some perspective as we get going here about the size of the global cannabis market today and what it's forecasted to in just 5 short years, I wanted to present this chart. So by the end of this year, BDSA forecasts that the sales of legal cannabis across the globe, including adult use and medicinal markets where applicable, will be about $30.6 billion. By the end of 2026, the global market is expected to be more than double, reaching just over 60 billion in sales and growing with a compound annual growth rate of about 15% from 2021 to 2026. But the key thing to take away here is that even though it's expected to be a much more developed global marketplace by 2026, the bulk of legal cannabis sales across the globe will still come from the US, as you can see from the black bars in the chart here. In fact, 2 of the largest legal cannabis markets in the US today in terms of sales, California and Colorado respectively, are expected to account for about 16% of global sales by 2026. So definitely don't lose sight of the United States in the global greater perspective. Now, keeping with the US market specifically, we've seen a tremendous amount of growth. The first half of 2021 showed universal growth across BDSA's tracked markets compared to the first half of 2020, with sales in newer markets in states like Illinois and Massachusetts up triple digits. And even in legacy markets like Colorado, Washington, Oregon, sales continue to grow in the double digits. All of this together really suggests that we should see sustained growth for years to come in the Northeast once states like New York, New Jersey, and Connecticut open their adult use markets in 2023 and 2022 respectively. And though some on the line may be challenged to see how such a fragmented, still nascent industry could reach such high growth, when you consider that by 2024, nearly half of US adults will have retail access to adult use cannabis across 18 markets, and that's at minimum, assuming we don't get more states come in before 2024, which we think is absolutely likely to happen. The picture for how this US market will ultimately grow to reach that $50 billion threshold by about 2026 becomes much clearer. And much of the growth and access is really attributable to states on the East Coast coming online in 2022 and 2023. And if we were to see other states on the East Coast join the likes of New York, New Jersey, and Connecticut and legalize adult use cannabis, we're likely to have more than half of the US having access to adult use retail in just 5 years' time. But growth in the US cannabis market is not just limited to sales and population growth. Today, we're seeing more M&A activity in 2021 than we have in years prior, with both the number and dollar size of these transactions in 2021 year to date exceeding those values that we saw in the same periods in 2020 and 2019 respectively. And the majority of these deals, as you can see, in 2021 really came from US-based companies and pertain to US-based deals. Again, all of this really continues to signal that the once fragmented US cannabis market is really starting to consolidate, and that those large MSOs and parent companies will only continue to get larger as time goes on. Now, again, just to put this in a little bit more perspective, you can see here that the 121 parent companies that BDSA has coded account for nearly 30% of sales within BDSA's tracked retail markets. And the amount of sales that trace to these 121 parent companies is up significantly by more than 20% compared to that same period in 2020. And all of this supports our expectation that going forward, with this continued inter-industry M&A occurring, that in the future, ultimately, fewer firms will likely account for a majority of sales in the US cannabis market due to this ongoing consolidation. And though it's been a record year for the number and size of M&A deals, CPG and large investment banks are likely to continue to sit on the sidelines of the US market until we see some type of legal cannabis reform at the federal level. Outside of the US, however, there have been some notable companies in the beverage, alcohol, and tobacco space who have made strategic investments or entered into joint ventures and partnerships with cannabis licensed producers in Canada, where, of course, cannabis is federally legal, unlike what we have down here in the US. And for these companies in particular, alignment with Canadian licensed producers is a much more fast avenue potentially breaking into the US market post-federal reform. This is especially true for those who have already aligned with licensed producers who have entered into agreements to acquire US-based companies once we see federal reform in the US. So we've seen that most of the investment in North American cannabis is coming from outside of the traditional CPG company and large investment bank ecosystem. But there are some federal reform measures being considered that would change the current trajectory and make investment from CPG companies and large investment banks more of a reality. Notably, the two bills that you see here on the screen that are above the line in purple, the SAFE Banking Act, which would provide cannabis companies access to traditional financial services like bank loans, and the Claims Act, which provides a safe harbor for penalties or other adverse actions for insurance companies that do business with licensed cannabis producers, would ultimately make the industry more attractive to the CPG industry and large investment banks. But these bills themselves do not change the federal stance on the legality of cannabis in the United States. Whereas those three bills that you see below the line do aim to ultimately change the federal stance on the legality of cannabis in the US. For example, the State Reform Act, which was recently introduced into the House, would decriminalize cannabis at the federal level, similar to what you see with the MORE Act. The Cannabis Administration and Opportunity Act, however, aims to legalize cannabis at the federal level and remove cannabis from the controlled substances list. At BDSA, we're ultimately predicting that one of these pieces of legislation will ultimately become law and is most likely to occur in 2022. And that if we were to see this in any of these bills passing, that would ultimately engender a more hospitable environment for cannabis investment. So considering the current state of the cannabis industry and where the financial services are today, I'd like to open this topic up for a panel of experts to answer some questions about their own observations and predictions for what the future may hold. So guys, if you're ready, I'll say the first question here. So, Camille, among financial service firms today, what is the general outlook for the cannabis industry? Would you say it's optimistic, pessimistic, or is there still some uncertainty?
I think still some uncertainty, but we've gotten past, I think, the big kind of areas of stress. You know, there was a lot of optimism kind of early on, I'd say probably 3 years ago or so. Once we went through the crisis and you had a bit of a clearing of the decks, I think now it's a little bit more of an understandable field. I think sort of the fervor has dissipated, which is a good thing. And I think it's some of what some financial firms need to see to be able to really feel like they understand the landscape and they're a little more relaxed on timing. And so still uncertainty, still waiting, of course, but I'd say a lot further along than we were before.
Awesome. And Matt, I'd love to get your perspective on this as well.
I think my bank and others, we see the market as having huge potential, right? We see that the market is already of similar size to beer or to spirits or tobacco. That said, as Camille noted, there's a challenge in terms of what we can do in the U.S. The action has largely been in Canada, and it's largely been around ancillary and some CBD and things like that in the U.S. And so the question of how will that market be addressed and how will we participate is a bit unclear. And in some quarters and some years we're kind of more optimistic and there's a bit more activity. Some years a bit less so. But I think that there's a general appreciation for the size of the market, and we're all kind of waiting for some kind of a regulatory regime or outlook that'll allow us to be more active.
That's great. So Matt, I would just want to continue on kind of that same road. So how are we seeing financial service providers currently participating in the legal cannabis industry, albeit maybe somewhat limited today?
I think that's really the key. The operative word there is legal, and so for most banks, certainly regulated banks, legal means federally legal, and so our position is we can support cannabis in jurisdictions where it is federally legal, and really, any company, the companies that we work with have to be conforming with and in compliance with the federal laws of jurisdiction, kind of where they are, right? So cannabis falls into that. So the activity's been in Canada, the activity in the U.S. has been a little bit CBD and in ancillary. We've seen some IPOs of Hydrofarm and Agrify and some things like that. But as it relates to THC, it's a very strong red line, and I don't think we're going to see any kind of meaningful banking activity around THC until there's very clear federal guidelines and potentially some precedent and just incredibly clear direction, so we know we're not getting offsides.
That's great. And so, Matt, you mentioned that we probably aren't going to see anything until we see any federal reform happening. Specifically, is there any specific bills or actions that the financial service industry would look towards to say now is kind of the go time, or it's a safer time for us to get in?
Rick, I think you noted some, right? And now that's this question of what does it mean to legalize? Does legalize mean criminalization? Does legal, what does it mean, right? And for us specifically, what it means is we need direction from the SEC. We need a capital markets. We basically need a direction that says we are in the clear in terms of capital markets issuance, in terms of interstate commerce. And as well, some of the other things that I think are maybe less thought about, like how do you handle a bankruptcy, right? So if we're going to issue debt in the capital markets and the company fails, there's a way to kind of work work through claims that investors have on a company, and we need to have clarity around how the federal government ultimately will regulate and will adjudicate cases in bankruptcies and things like that. So it can come in many different forms, but it's going to have to be very clear direction for us in order to kind of take any kind of meaningful any kind of meaningful mandates or have meaningful relationships with THC companies in the U.S.
Great. And Camille, I'd like to kind of hear from you on that same topic there. Are there any things that you yourself or that your firm would look at as kind of those clear signals, like any specific bills or any specific actions, maybe different than what Matt had just reiterated?
Well, I think the most important thing is what Matt said, is it's not just, we can't just have kind of federal legalization and then we're all at the starting line, the gun goes and we all just start racing. We need to really understand the ins and outs of it. We need some clear direction on what to do next. What I do think that what the banks are doing is there is a view that eventually this will all happen. So a lot of work's been done behind the scenes, and it's kind of figuring out how are different departments going to structure themselves. There's kind of a lot of action in terms of blueprinting and design mechanisms to figure this out, so that once we do get, and you listed, 3 of them, once we do get some sense of clarity, what are the questions we have to ask? What do we go to the SEC for? Matt brought up bankruptcy as an example, and there's maybe 50 other items like that we do have kind of laid out, that once we get to a place where we think we're close to being clear, we know the questions to ask, and we'll start that process.
So just a general question to the group overall, and certainly Mike and Matt, you can jump in here if you have a good response to this. But if we do start to see federal legalization or some sort of reform on banking access, how fast do you think that would take for the industry to ultimately scale where they're able to start doing business with regular cadences similar to like any other industry? Do you think that's going to be kind of like an overnight thing, or is this going to be months, potentially even years after federal legalization were to happen, that we should see financial services firms jump in fully?
I think when it happens, we'll go through the second boom. Like, we had kind of a boom and then we went into a bit of a crisis. That was a clearing mechanism. It will happen again. I think when we go into federal legalization, we'll have another boom period. Always hard to know how long these things will take or what will be the thing that cracks it, but we'll be in another boom. That then will dissipate. And once it dissipates, we will get to that consolidation that you're talking about. So it won't be immediate, because what will happen is a lot of capital will become available, a lot of folks will be investing, and everyone is going to believe that they can be the one that ends up being the successful one. We'll find out that a third of, like every industry, it'll be some small percentage of them that actually be the ones that win most of the prize. And if they're to do that, you've got to go through this sort of clearing thing. So I don't think it's going to be one of those that banking has become available, consolidation accelerates, we get to some sort of Coke Pepsi equivalent. I think you end up having lots of players in the second boom, then eventually that will consolidate and end up looking like the rest of the CPG industries do.
So Micah, I want to point the question over to you now that we've heard from Matt and Camille. So how do you think, Micah, that this position from the largest investment banks is really going to impact the speed to which we will see, assuming we will, consumer packaged goods brands entering into that legal cannabis space, keeping in mind that we've already seen some action from some beverage, alcohol, and tobacco companies by way of Canada, but really thinking beyond just beverage, alcohol, and tobacco.
Sure. I think that the entry by the traditional manufacturers into this sector, and traditional retailers too into this sector, whether those are coffee shops or convenience stores or CPG manufacturers, snack food companies, etc., it's inevitable. It certainly is likely to happen relatively quickly when legalization occurs. But I do think it needs to be full legalization, decriminalization, not just a Safe Banking Act type of play. I think the sports betting model is probably something to look at, where you had some early movers like Disney, which went into DraftKings, I think back in 2016 or 2015, really early in the sports betting world. And that, I believe, has turned out quite nicely for them at the end of the day. It was a very good investment. So I could see something similar happening here. But I think in this case, what's interesting is the larger companies have very sophisticated financial systems in place. And to Matt's point, you can't jeopardize those relationships with a traditional banking firm or traditional lender in order to go after a relatively small amount of revenue. And for these large companies, even a $25 billion market or a $40 billion market is still smaller than their primary markets. And so they've got to weigh that risk. It's really going to come down to their management teams and the shareholders, because this is also it is essentially a sin industry, right? So if you're a beer company and you're jumping into cannabis, you're not really going to expect your shareholders to be really upset with you for shifting gears. But if you're, Procter & Gamble or Kraft or somebody, it's going to be a little bit harder to justify why you're jumping into the cannabis industry in the first place. And that could actually raise some red flags as well with their shareholders. If you have an endowment, if you have a pension fund, if you have major shareholders like that, they may very well question the investment in cannabis and really slow down that movement by those largest companies.
And Micah, you touched on something very interesting kind of in your response there that I'd like to pose to Matt and Camille. So Matt, Camille, either one of you, if you want to respond to this. You mentioned that you believe that's going to most likely take federal legalization versus decriminalization for financial services firms to really embrace the cannabis industry, similar to how they would maybe other more established industries. So Matt and Camille, do you share that belief that federal legalization is going to be required versus decriminalization, or some other mix of the two?
Yeah, from my perspective, go ahead, Matt.
Please. I think it's absolutely going to require federal legalization. Just to say we're not going to prosecute you, that's a tough thing to get through an investment committee. And so what we'll have to be able to refer to very clear guidelines and codes from our regulatory agencies that says this is how you're allowed to do it specifically. So it can't be passive. It has to be active and prescriptive for us and for other CPG companies. I think to do it, and as Micah was saying as well, we're all part of the same ecosystem, so we all have to kind of move forward together. Coke can't move forward if their banks don't move forward, and vice versa, right? So that's going to be the challenge in terms of us all understanding legalization and being organized to kind of move forward and kind of in a coordinated way in order for there to be large-scale deployments of capital.
Yeah. And I do think the beer industry is, it's obvious that some of them have already taken some stakes and tried to get involved in some way. But the business also is declining. If you're just looking at beer, they're becoming a lot more comfortable doing other things. Beer as an industry hasn't grown in volume terms for 20 years. And if you look, whenever something new comes around, like right now, it's more about RTDs, like the vodka soda in a can. A year ago, it was about seltzer. You've got energy drinks. Molson Coors launched an energy drink with The Rock. They're starting to develop a lot more comfort, or they're developing a lot more comfort on things beyond just doing beer. Anheuser-Busch has an entire division called Beyond Beer. And so once we do get to federal legalization, I agree with Matt, it has to be full kind of clear. Once we do get there, I think the beer companies will probably move a bit faster because their primary industry is stagnant. Right? There's a lot of other companies, if you still have a lot of growth in whatever you're doing as your core, may not chase it as quickly as somebody like the beer industry.
So it sounds like we're all kind of signaling that federal legalization will be required for larger financial investment firms to really get involved. But I'm just wondering here, at what point should these financial service firms really start to pay attention to the industry and more strongly consider making some of those strategic investments, assuming that we have federal legalization? I mean, do you think that everyone's going to jump in at once? Do you think that some may take a wait and see approach? Or do you think that, a lot of folks are going to sit on the sideline unless someone really starts to have some success with it?
I think the international banks will probably be a little slower than the domestic ones. I think you might have your the banks in the U.S. Many of them cover cannabis already, and they're I think closer to it. I think Credit Suisse, being a Swiss firm, is a little slower in doing things. I think the European banks in general might be. When I say international, I should have been more about the European ones. I think they're just a bit slower. They do things a little bit at a slightly different pace, and so everyone will be paying attention. I just have a feeling that's how they'll move.
And Matt, I'd love to hear kind of your opinion on that as well. If you think everyone's going to jump in right after federal legalization occurs in the U.S., or if, again, to Camille's point, that some might be slower than others.
It'll be interesting to see how it plays out. So I think Camille's right in that it's probably not going to be the large money banks that go first. It may be like a Cowen or a Jefferies or some of the the scrappier banks who are looking to grow and have more of a risk appetite. And some of the bigger banks will be fast followers. But I think the other part of the dynamic is it's going to depend on our relationship with our clients. So just as an example, at a former bank that I was at, when Altria took a stake in Kronos, we kind of got dragged in because we were a lead lender to Kronos, right, or to Altria. And the irony wasn't that. The irony is that we had no problem with the cancer stakes. We had no problem with the cigarettes because we understood the market, we understood the risk, right? It wasn't a value judgment. It was just a risk assessment. But we didn't understand the risk assessment as it related to federally legal cannabis in Canada, but we had to figure it out quickly because one of our major clients was making a completely legal investment, right? And so there will be, I think, a bit of an interplay between how corporate America and how CPG and other countries participate, and then how the banks work with them or build off of that. So I think particularly with beer and tobacco, as Camille said, their volumes and their revenues are most challenged, and cannabis probably poses the most immediate risk and opportunity. So they're likely to move faster, and the banks who are supporting them are going to have to move with them or make really hard choices about who they want to bank and how they want to bank.
So Micah, I want to direct kind of this question to you. We talked about Altria, Kronos investment, a lot of folks investing in Canadian companies, but in terms of the future financial health and upside for investors, should institutions, in your opinion, more strongly consider Canadian-based licensed producers, or should they more strongly consider US-based multi-state operators? And do you expect that dynamic to change 5 years out after we see US federal legalization?
Yeah, it's a fascinating question, and it raises issues about the Canadian Securities Exchange coming out of Calgary, where a lot of the U.S. operators are listed, versus the TSX. And the TSX, my understanding is they're still prohibiting U.S. operations on any listed company. And that forces any U.S. operator to list only on the Canadian Securities Exchange, the CSE, versus the TSX. And I know a lot of U.S. firms have done that, but that also restricts their tradability, right? There isn't as much access to the CSE, and institutional investors can't necessarily trade on that. They may have some mandates that prohibit them from doing that. And the volume is completely different between the CSE versus the TSX. And so you've really got to make a decision as to whether or not you're comfortable jumping into a smaller exchange like the CSE versus the TSX, and the liquidity issues that may come with that, versus the access to companies that actually are operating in the U.S. currently, versus, let's say, the Canopy Growths that just purchased had the right to purchase now the Wana House of Brands based out of Colorado. And so it's a different play that we're seeing. And I think it's challenging to be involved in the Canadian publics in general, because frankly, they're getting hammered. And people are really seeing a lot of lost paper money at a minimum. And it's a long-term, you got to have long-term belief in the sector and the ability of those Canadian firms to execute. I will say my personal opinion, looking at it for the last 6-7 years now as an investor, those Canadian companies made some significant bad decisions in terms of their capital spend, where they just were spending too much for the size of the market. And so that ended up really hurting their credibility, because while they could be building a great business, they were sort of overbuilding that business for the time and the place. What's interesting is that may very well be changing in the near future, because the market is getting much larger. And those companies that can survive may very well find that they've got really great executive teams and really terrific experience building these firms, and can then jump into the US market, for example, and rapidly take over, because they actually have 3, 4, 5 years experience trying to run cultivation, manufacturing, distribution, retail, branding up in the Canadian market, or even down into the US through these proxies that they have.
That's great. And Matt and Camille, I'd love to kind of get your take on this in terms of the long-term financial upside for US-based MSOs versus kind of the Canadian LPs in a post-legalization world in the US. Which side do you think is going to present more financial upside for investors?
Well, it's difficult to know because there's so many different pieces to it when you're looking in, when you're looking kind of across categories. But I would start with, just because one of these businesses might be really successful in Canada doesn't necessarily mean that they're going to be the one to get it really right in the United States. There are tons of companies across consumer goods of brands or businesses that have been really successful in one country and just couldn't make it work in another country. And if you look in the United States, but also in most parts of the world, there ends up being a Coke and a Pepsi, or a Huggies and a Pampers. There ends up being, two that do it. Now, predicting who that one's going to be is difficult. And I think while there's some, natural expertise in that sort of thing with some of the LPs in Canada, it's not as if the folks in the United States are not working really hard to figure out how to make sure that they're the, top share equivalent whenever we do go full sort of legal. So I'm not quite sure on how that's going to work. There's a lot of the companies are, a lot of my public companies in other industries, beer, tobacco, those sorts of things, are taking stakes, hoping that the IP transfers easily. Some are hoping that because they're in the beverages business, they'll be successful on the beverages side of this business. But it's really hard to go cross border. So my guess, if I was to guess, is there will probably be someone in the United States that surprises us and ends up being the top share leader once once this industry starts to mature.
That's great. And Matt, I don't know if you have anything to add to Camille and Mike's response there.
Yeah, just kind of stepping back, the U.S. market, and Michael, correct me if my numbers are wrong here, but the U.S. market's maybe 15 times the size of the Canadian market in general, total addressable market. So, and as Rick, the slides that you presented earlier indicate, now into the future, the U.S. market is the largest share of the global market, and will continue to be, right. So I think betting on the U.S. market is a pretty good bet in general. I think Warren Buffett said, don't ever bet against the U.S., in anything. I think that would probably apply to cannabis as well. And I also share Camille and Mike's skepticism that the Canadians can come into the U.S. and not because they don't have good expertise in operations management teams, but because there are a lot of people who are trying to figure that out in the U.S. That, there's already, there will be a lot of licenses that are already taken up. It's, there will likely have to be the Canadians coming in to displace, to some extent, all U.S. incumbents, and that's much tougher than if it were just kind of greenfield as it was in Canada.
Great. And Matt, if you don't mind, I'd like to stick with you for this next question here. So obviously, since state legalization began in the U.S. back in 2014, we've seen a tremendous amount of consolidation and M&A activity within the legal cannabis sector. Do investment banking firms predict that legal cannabis will ultimately mirror other consumer packaged goods industries where the bulk of sales will really trace back to several large multinational conglomerates? Or do you think it's going to be different? And again, I'm picking up on the Coke and Pepsi kind of debate.
Yeah. That's my guess, right? And I think, Camille kind of said it, like in a lot of mature industries, you see it, it's kind of generally said that in a new industry, if you're the first in the industry, you get half of it. And then everybody else fights for the other half, right? So, and in beer, you've got AB InBev and some Coors with about 75% of the market, and Constellation maybe with 10, right? And so it's not, same with cigarettes and things like that. So I think it is likely, because there are scale benefits in terms of producing, processing, distributing, marketing, R&D, there are scale benefits to cannabis that there will be a couple of large incumbents. But I do think it'll take 20 years or more. I mean, the beer consolidation happened over 100 years. In the 20s and 30s, there was kind of a brewery in every town, and it took a very long time for that consolidation to happen. So that's my guess, is that it will happen, that you'll see something that looks more akin to beer than wine. There will likely be an active and vibrant premium kind of craft part of the market also. But I think one of the $64 questions is, what does legalization really mean? Does that mean that interstate commerce is permitted? How much of a hand will the states have in regulating? What kinds of barriers will they put up that may create challenges for competition, right? So right now within beer, beer can cross straight lines, but distribution is regional. Will cannabis be able to cross state lines? If it can't cross state lines, then we may not see the type of consolidation that we've seen in other industries.
Great. And I'd like to pose this one to you, and then maybe Micah or Matt, if you want to jump in and piggyback, that'd be great. So Camille, we talked a lot about kind of what the future, but taking us back to sort of where we're at today, what specific factors, if any, do you think that investors should consider when weighing the long-term success for a cannabis firm? Are we looking at things like cash to debt ratios? Are we looking at the number of markets or number of states that a firm may already have presence in, or some other factor?
I think there'll be a few things. The first is, I think there's general agreement that the market's it's quite large. There's general agreement eventually federal legalization will happen. The pieces then, I think, for investors will be, well, where's the right place to play? Where within this chain do I want to be involved? Now, every company wants to be the Coca-Cola equivalent, meaning the marketing house, and somebody else does all the hard work, which is the Coke bottler. Coke markets and they sell syrup, and the bottler does all the hard work. Everybody kind of wants to be the marketer, wants to be the Coke, but it's very difficult. It's very difficult to do, and there won't be as many. And I think there'll be major efforts on branding, most of which will probably struggle, because the thing about brands is that they're built over long periods of time. And there'll be this kind of race and struggle to kind of build a brand really fast. And it's extremely difficult to do. And so I'm not quite sure it's going to happen on the branded side. We then have to look, well, where does the margins exist in the tiers? It's very likely the distribution tiers are probably going to be a series of privates. Likely to be a bunch of beer distributors, spirits distributors, like Southern Wine Spirits already has a mechanism that they're working on. And so that maybe that might not be available to the average investor. So I think it's going to come down to kind of deciding on these brand wars. Of course, like in any other industry, who's selling the picks and shovels? Is there money to be made there? We always, that's, I guess, your most common is it going to be dispensaries? Is it going to be, obviously right now we have MSOs and things like that, which I think is almost such a unique phrase, because we have state-based regulation already. Even when we go to federal legal, I think state-based regulation is not going to go away. So the question becomes, how scalable are those benefits when you exist in multiple different locations or multiple different states? We don't really know the answer to that yet. What we'll know is as once we get to federal legalization, there'll be a lot of capital around of everyone trying. So if you can sniff out who's going to be the brand, great. That's going to be extremely hard to do. I'd probably spend more time in the picks and shovels.
Yeah, Camille, of the unknown, I think you've noted many. One of the other ones that what will the ultimate form factor be? Right now we have a largely flower market. In 20 years, will it be edibles? Will it be beverages? Will it be transdermal? what will it be? And how will brands develop around form factors, or how will form factors create brands, and then what will be the right companies to deliver those form factors and those occasions, and just the total behavior around cannabis and how it will evolve, I think is unknown, right? We're going from something that's illicit, and so an illicit market to ultimately a mature market. I'm not sure we really understand what consumer behavior is going to be like in 20 years.
Mm-hmm.
Yes, and Matt, you brought up something really interesting, and a question I'd like to pose, and Micah, if he has a response to this. So, Micah, in your opinion, are there certain form factors that you think would benefit the CPG companies themselves more than others? So, if we do see, as Matt may allude to, something like an edible form coming to the forefront, do you think that would be more of a welcoming format to usher in some of these CPG companies who want to get into the space after legalization happens in the US?
Yeah, absolutely. So form factors are really difficult for small manufacturers to experiment with and prototype and innovate. And we see that in all the time. Cannabis goes legal, everybody's like, I want to do a chocolate bar. You figure out that chocolate bars are really hard to ship and really expensive when they get melted. And all of a sudden you start pivoting to other form factors. You look at a gummy, and the gummy is easy to make at first because you just spray some THC on top of a gummy and there you go. And then you realize you've got contaminants and recalls and all sorts of problems that happened in the past. Then you realize, like, wait, you need to make sure it's a consistent experience from the gummy. And as a small manufacturer, you don't have that experience, you don't have that skill set to really dial this in and make sure you've got a shelf-stable product that will deliver the exact same experience all the time to somebody who is purchasing it, not from an expectation of experimentation. But I don't pick up a beer because I want to experiment and see how it goes. I pick up a beer because I'm like, it's been a long day and I'm going to crack open a beer and watch the ball game. And that's what I do. And if I open the beer and it doesn't smell good, if it doesn't have the right alcohol content, etc., I'm going to be a little bit irritated with that manufacturer. And those companies know that. And they're really good at dialing it in and having a really consistent experience. I think that the innovation of form factors, fast-acting edibles is a really interesting one to look at there. Edibles are so convenient. We're all used to having, a package of candy and, X number of units of candy in the package, right? All of that. It really lends itself to a cannabis experience if you can have the onset within, let's say, 20 minutes. If the onset takes you 45 minutes or an hour and a half, like it does sometimes with traditional edibles, that's a bit frustrating when you're trying to consume. The other issue with form factor is, which is interesting, is the use cases. Now, not saying that people don't use wine or beer for health reasons. There is some mental health stuff going on, as any parent knows with a glass of wine. But the cannabis environment is much more of a diversified experience. You've got cancer patients on the one hand who are using cannabis truly in a medical fashion. And then you've got, college kids who are getting high and want to have a good time, and that's what they want to do. And the form factors can obviously be very, very different from one occasion and use case to another. And that's, again, something those CPG companies are familiar with. They get the concept of having different size packages, different form factors, different branding, running different brands to appeal to different types of consumer. And so there's a lot of expertise. And it's the reason that pretty much all of the cannabis companies right now are desperately hiring people coming out of CPG. So you look at all of the people who did innovation at, Kraft or Hershey or wherever, and you find them going to work at cannabis companies. And they're bringing that expertise right over to the cannabis companies because that is the cutting edge of product development.
Yeah. One of the companies or industries, I guess, to watch is the consumer businesses that are being spun out of the large pharma companies. So Johnson & Johnson just announced recently that they're spinning off their consumer division. Their Perrigo has rebranded themselves really as consumer health. Glaxo is spinning theirs off. Those are the guys that will have that expertise, will have different form factors. They have an understanding here, and they want to be consumer companies. They desperately do. They don't want to be considered just the science geeks that they probably actually are, but they want to get more into this consumer world. And so I think it makes sense that they're breaking these businesses off. And especially because if you're a large pharma like Johnson & Johnson, Johnson & Johnson's consumer business is going to be huge, probably $60–70 billion company. You think of the size of this industry being substantial, it's still tiny compared to what Johnson & Johnson does in terms of their other pharma products. And so, but if it's just consumer on its own, if you have a business that's just consumer, and I think maybe the number is 50 billion or something, I can't remember exactly, but when they're just consumer, now you can participate in an industry like this, and it could be more meaningful for the business that you have. So I think that part of the industry, that consumer health sort of area is are the ones to watch that we haven't heard that much from yet, but I bet we will.
Absolutely fascinating stuff. One question I'd like to pose here to Matt as well. Are there any untapped opportunities for financial service firms in legal cannabis? And if so, what specific areas seem most promising or likely to yield the highest revenue potential in the future? I mean, certainly we've heard of some that are doing underwriting. We've heard of others that maybe have real estate holdings relative to growers and that. Any specific areas that you think are kind of undertapped either now or in the future?
Well, I think one of the things that's both good for a banker and maybe bad for an operator about cannabis is it's a capital intensive industry, right? So it's a physical capital intensive industry, and so there is need for capital all across the value chain in all forms, whether it's a mortgage or a sale leaseback on a retail site, or kind of ag banking products and risk management, all the way through to capital markets. I think really the opportunity and what excites me is the investment banking opportunity. That's maybe a bit, I'm a bit biased in my view because of the work that I do, but accessing capital markets, right? Ultimately, when companies get big and you start to see really large amounts of capital formation, there's a requirement to go to the capital markets, whether it's equity or debt or kind of similar types of products. And because this is a capital intensive industry, and because I think it will scale in the long run, there's an opportunity for a lot of M&A, for equity underwriting, for debt underwriting. Although I think banks that have broad product suites ultimately can be more competitive if they choose to be, because of the needs of cannabis companies and of the industry will be broad.
On my end, I think ag tech, there's already a lot happening in the ag tech world for a whole host of different reasons. It hasn't as carefully and thought we haven't seen that much of it in this industry yet. We're seeing the beginnings. You can kind of see it already starting to bubble, but if you look at what's going on from an ag tech perspective on just food supply and those sorts of things, it's going to come this way. And it can really change the size of the yields, the cost of it, like all of these things can change a lot more substantially once you bring those technologies over here.
So for the last question, we'd love to do kind of a round robin here, starting with you, Micah, and then whoever wants to pick it up. But what today can legal cannabis companies do, in your opinion, to make themselves more attractive or more suitable partners for financial service firms, either now or in the future?
Well, number one is don't cross the line and do anything illegal. Which there have been some good companies that have made some mistakes, and that's been really problematic for them. So I think that's number one, is compliance, really watching out for compliance. Number two is avoiding bad fixed cost investments. So don't get out over your ski tips building out facilities, building out cultivation, building out retail chains that really don't support the long-term investment profile. To that, there's a really big question that most people are trying to deal with, which is interstate commerce actually going to open up anytime soon? Or is it going to be like alcohol, where even when it was legal, you couldn't cross the border for some period of time, perhaps forever, depending on which county you're in. And so those things of really watching compliance, and then focusing on figuring out those fixed costs and what is the burden that somebody is going to have to take on if they do acquire you, and where does that go? Those are two of the big things. The other one is, of course, the team. Building out a really top-notch executive team and really operations team. is going to be critical here. I think the analog that I see, which is sort of intriguing, I'm not sure it's always correct, but I think it's interesting, is insurance companies. Insurance companies typically are state by state, and they'll roll up into regions. So you're like, oh yeah, the Northeast region. And then they have to form another region to tackle the Southeast, because the 5 states in the Southeast also have different regulatory structures, and they need another executive team, another president to run that division and where that goes. And I could see that being a little bit of the strategy for a national cannabis company in the US, where even though they're national, they're really, let's say, 5 different regional sectors.
Go ahead, Matt.
Yeah, I agree with everything Mike had said. I mean, run a good business, run your business with integrity, execute well. The other thing I would say is, be open to talking to people in financial services, right? I mean, we have clear limitations in terms of what we can do, but we're curious and we're trying to learn, and we see the potential. And so educate us. Like the more we know, the more we know about a company and the quality of management, why their business strategy is the right strategy, and why it makes sense for me to go raise capital and deploy capital and do so in a kind of a, in a trusting professional way, the easier it's going to be. So definitely, be open, talk to people in the financial community, educate them, talk about your business. So when the gun fires and we're ready, we can start doing work. We'll know who to work with.
So I think, one thing I want to chime in there, Matt, which I really liked what you said earlier with the Altria deal and to Kronos, the fact that a huge part of the challenge for you was you didn't know how to do the risk profile for that investment. And that is a really interesting point, not the regulatory piece or not the cannabis piece particularly, but literally just the unknown market. Like you didn't know the market dynamics. And that's really intriguing to think about, because that's not something that I've frankly heard before talking about this stuff.
Right, so help us understand it, right? Like the process is going to be a little bit slow, but the better we understand it and the better we can communicate it, the quicker that we can turn the taps on and get the capping. But that is a challenge. I mean, fundamentally, credit analysis is a backwards-looking analysis. We're looking to what has happened historically, and what does that mean for risk on a forward basis. And so when there isn't a track record historically, we have to work even harder and be even better educated. And sometimes things take a little bit longer, but it's more incumbent upon us all to kind of do the work to build an industry that's low risk and that's serving customers and that's serving communities and is doing it with integrity, and something that we all have to do that together. We're all part of the same ecosystem.
Yeah, I'd agree. And trying not to repeat anything that Matt and Mike has said, I think the first thing it perhaps is important is to have a good sense of where the market is. And what I mean by that is there is a time where you can sell an equity story, when you can have a narrative, and it can be about the TAM and it can be about the future and all sorts of things. There's other times when it's about fixed cost leverage, inflation, labor, whatever, and the market tends to care about different things at different times. Just about 3-4 months ago, you could sell a large TAM story and the market was in for it. Right now, we're a lot more worried about some more tangible sorts of things, because you may never get to that TAM if inflation eats up all your profitability. There's nothing you can do. I think Oatly might be a good example of a company that very recently is just, everyone does feel fundamentally that oat milk will be a very, very large industry, and they will be a large company that is the share leader in the space. But at the same time, they can't make as much as they need to because there isn't enough labor, and they're trying to cap the projects and stuff like that. So you have to have a good sense of a feel of the market. And I guess that's the sort of thing, if you're engaged with Matt or something that folks we can help with, but really understanding, like being appropriately self-aware about where the market is, because it changes frequently. I guess the second thing I do, of course, is hire BDSA, because you need the best, you need to get after the best data to be able to make the best decisions.
Second that one, Neil. Well, that's all the time that we have for this particular webinar. Certainly want to thank our 3 experts on the line here, Micah Tapman, Matt Singer, and Neil Gajrawala. for sticking in and tuning in to this presentation. Certainly, I know I learned a lot. I don't want to speak for the folks who may be on the line that I have to think they learned a lot about cannabis and the financial services industry as well. So with that, I'm Rick McCurl, BDSA. Please reach out if you have any questions about how BDSA can help either your existing company or an initiative that you may be working on as you work with financial service providers. Thank you.